Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be discussing the weekly sector review of all of the S&P 500 sectors. So jumping right into things, we're looking at the weekly chart of the materials sector, XLB. First things first, materials sector has been a monster sector over the last several weeks, trading for 6 consecutive weekly higher closes in a row. Massive technical breakout out of this long-term consolidation pattern. You can see this yellow moving average is the 7-week moving average, clearly trading well elevated above that key moving average. Now, the upside target off of this consolidation breakout, there's a large weekly inverse head and shoulders as seen by these curved patterns over here. Upside target takes you to 108. Now, don't be surprised if there's a check back to support. I would like to see this pattern retest this breakout channel, and that is kind of your area to go along and write it up for the next wave. A little bit extended here in the short term, hitting that weekly RSI overbought territory. You've been overbought on the daily RSI for a little bit, but it doesn't mean you can't keep grinding higher. It's just short term, it's a little bit extended, so I would lean a little bit more cautious about trying to chase the sector here, although the medium to long term trend does appear to be well intact to move higher. If you look at communications, XLC has just been chopping in a tight range. Keep in mind this particular ETF is heavily skewed by Meta and Meta alone. So Meta is obviously seeing some resistance as of late. There's really two trend lines I'm watching, all the way back to 2012 Meta's IPO, connecting to your high all-time pivot in 2021. Look at how this resistance level has kept us in check off of this long-term trend line, and you're simply now trying to retest that trend line and hold. The next trend line is pivot to pivot to pivot. This was your bigger breakdown trend line before you had that capitulation fall. We have had two weekly closes above that trend line, but now the fact that you're back below that, this is a big level. Can the bulls stay above this upsloping trend line going all the way back to its IPO price? If they can't, then it does open up a possibility for Meta to retest this 383 level, its previous all-time high price, which would be that massive gap window. So watching Meta here closely because it is potentially starting to lose the weekly 7 MA, which it's really been keeping since this bigger uptrend started really back in November, December. But again, this is definitely going to weigh in on XLC at the moment because I do think that XLC is due for a retrace. We are seeing a little bit of a bull flag pattern starting, but I don't really like this type of consolidation right at this resistance. I mean, it does suggest that we are holding bullish structure and could break out, but just due to how extended Meta and the weighting that this particular ETF holds, I do think that we retest lower or at least the upsloping trend line, its mean trend, before it starts to break higher in the overall grand scheme. Energy is looking exceptionally bullish. XLE has been stuck in this consolidation range since June of 2022. You had a low all the way in July of 2022. So it's about a 1-month bearish range that XLE has been consolidating and distributing and showing signs of accumulation. It does appear it wants to break out. Now, XLE has also had 4 weeks of upside here, 5 weeks of upside consecutively, and it is running into a little bit of resistance as seen by this pivot high in 2014, connecting through all these pivots, but it does appear to want to break out here. I think that this resistance may keep us in check for a day or two, maybe a week at most, but when you look at the grand scheme, oil is breaking out. Weekly breakout on oil last week, and this is looking like it's heading higher. So if oil's heading higher, that means XLE is heading higher as well. So this is definitely a sector that I'm still bullish on and riding some of the longs. We've already taken profits on XOM calls with members. A couple weeks ago, we took profits on RIG because that one's been a little bit of a catch-up trade. I still have an upside target of RIG of about $7, over $7, but we've pared back a little bit of profits and still riding the rest of the position with break-even stops, so the trades are risk-free. But I still think that some of these stocks remain exceptionally bullish. You know, XOM definitely has been a beast itself, really since it broke out of this consolidation phase. But this one looks like it wants to at least head to this gap fill at 115 and maybe even double top if oil really starts to gain momentum and push for that $88, $90 a barrel trade. So XLE certainly looking promising to continue higher since oil is still holding bullish momentum. Looking at financials are interesting because on the weekly chart, you actually got a little bit of reversal to close back below this trend line. This trend line connects all the way down to your COVID low crash. We're talking 2020, connects through all of these pivot supports here where you chop for multi-weeks, finally had a bearish breakdown, then it recaptured, then you hit support again, then you had a big wide range breakdown on volume in that area, and now you're finally retesting that vicinity with consecutive. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 consecutive green candles. Look at your weekly RSI. The last few times the financials ETF have hit a high of this RSI, you had a pullback. A high over here, you had a nice pullback. Highs over here, you had a little bit of a pullback. Do I think that financials can actually push higher after a pullback and retest 43? I do. I think the move in financials is a little bit lower, maybe a 5 to 10% drawdown, and then potentially a push higher. But keep in mind that if we're going through an inflationary cycle over the next, say, 2 to 4 months, what does that mean for the interest rates? Does that mean interest rates push higher and puts additional pressure on financials? It certainly could be. This could be one potential double top that is also trying to unfold in the financial services sector. We haven't quite hit it, but this could also be a mega double top on the XLF pattern, and we have to watch for that very closely. XLI industrials have also been a very strong sector. Multi-week rally, consecutive moves upside. It's looking very reminiscent to this pattern, but granted, we're a little bit more extended and overbought on kind of all metrics at this point. Same thing, getting a little bit of a curling action in the weekly RSI. I still have an upside target of 125, but I do think that we're running out of some momentum here, and we could see a little bit of a consolidation period take hold here. Now, granted, if the consolidation is just sideways, then the upside target will likely be moved up. But I do think that even 110.68 is a potential scenario for a retrace in the XLI ETF. XLK has been a monster sector in and itself. First things first, you can clearly see we're hitting this parallel channel. This was your COVID crash, so it's natural to overshoot resistance and support levels. In this case, we overshot a support level. But when you drag this trend line from this pivot in 2018, this is your Powell, this is where he pivoted, but this was kind of your market tantrum on the back of Powell being a little more aggressive. Then you had your COVID freakout low, pivot high to pivot high. Look at this resistance here, consolidation in this trend line or at this channel of resistance, and you're still looking to break lower, actually getting a weekly close below the 7-week moving average. So we haven't got that weekly close in quite a long time. We had it here and they negated it, and markets absolutely ripped higher. But we're into some very big resistance, and you can even see that we have a bearish divergence forming on the weekly RSI. Lower highs on the RSI, as seen by this, but you have higher highs in the price action. That's a bearish divergence that is unfolding on a large term time frame. So got to watch for that potential weakness to unfold. Now, with the XLK, there's one thing I'm watching. First of all, if we go all the way back to 2000, you have your pivot to your pivot. This is going to be an epic support level. A retest of this trend line, that's what I'm expecting. Because we broke through it with sheer conviction, I think we get a retest of that key trend line on XLK. That would roughly mean about a 7.6% decline from current levels in this particular ETF. Keep in mind, this ETF is most heavily weighted in Microsoft and Apple. Those two stocks alone hold a very heavy weighting. What I find very interesting is Microsoft actually tried breaking out to a new all-time high and actually had a beautiful daily confirmed breakout on watch, and it got rejected. This could be a failed breakout because the gap down happened on excessive volume. So I'm watching Microsoft for a potential failed breakdown. Obviously, we all know Apple has been structurally epically weak. On the weekly chart, Apple's still looking to put in lower price action, but at this point, it is much more oversold compared to some of the other mega caps. So we just have to watch and be mindful that, if some other mega caps rotate downwards, Apple still could catch a little bit of a bid off this sector just due to the fact that it's more oversold compared to its peers. But I still think Apple is going to retrace in the grand scheme of things back to this trend line, this breakout trend line, and then you have this upsloping trend line going all the way back to your COVID low. That's a big confluence area right in this 157, 158 zone. So Pierce of 160, I like Apple on the long side, and it is looking like it wants to potentially head to that vicinity. But again, don't be surprised if Apple wants to try to push up and then we see some sort of reversal. It's obviously not immune if the markets start to break down. So XLK is certainly on watch for a retrace. XLP is the next sector, consumer staples. I remain bullish on staples. One thing I remain bullish on is because staples have had a strong uptrend, but inside of that uptrend, you've had a nice consolidation, pullback, sideways chop, breakout, higher prices. Consolidation, sideways chop, breakout, higher prices. Consolidation, sideways chop, breakout, higher traces. So this has actually been just stair-stepping its way up, and you can see it has broken out of this weekly channel of resistance and is trying to get a confirmed breakout. Now, the only resistance that you need to get above is this upsloping trend line. Pivot to pivot, breakdown point, you're retesting and finding some sellers. So you're at a big inflection point for staples. Bulls need to get it above this upsloping trend line. Bears need to get it below this downsloping channel. So right now we're going to see a fight unfold in the staples, but I remain more bullish because this typically is a sector that sees a little bit more bullish rotation when markets go through turmoil. It's often a defensive sector by nature. Looking at XLRE real estate sector, obviously real estate had a little bit of this double top trying to attempt a breakout here, and it appears to be getting faded. Now this pattern isn't broken at the moment, but we need to watch. If you start losing these weekly 7 moving averages, then that's not a positive sign for this particular sector. And I still am cautious with XLRE because you are shaping up potentially a larger head and shoulders, left shoulder, head, right shoulder. Obviously, you haven't triggered the neckline, but with rates moving higher, with inflation expected for at least next month and likely the following month to also uptick, that's for the next 2 months, you're likely going to see CPI accelerate, which should put upward pressure on interest rates. Real estate could be vulnerable. Real estate really could be vulnerable. So we're entering a seasonality period in real estate, in the physical real estate, where you typically see more bullish flows enter as we enter the spring and summer market. But let's watch those interest rates carefully because they can snuff the momentum rather quickly. Looking at utilities now, XLU. So utilities on the weekly chart still in a downtrend. Lower highs, lower lows. The only granted bullish part is that you could have a weekly inverse head and shoulders, and you could be trying to attempt to break out here. So right now you're at resistance. If you get rejected, you could retest 61.98. If you break through this, utilities have a sheer amount of upside around 76.62. And what was interesting was utilities were underperforming as rates were going down, which is typically not what you see. So typically what you see is utilities underperform when rates are going up, but we actually started seeing utilities underperform when rates were going down. So are we going to see kind of another correlation break where utilities might see some defensive capital flow into it as rates move up? I'm watching that very, very closely. But right now, trying to attempt a little bit of a breakout hasn't been successful at this point in time. Healthcare XLV obviously trading above its previous all-time high, breaking out of this wedge pattern. You can see I still have a target for it to retrace to 138. I do think 138 is a pretty decent area to try to attempt a long. If you start losing this upsloping channel, then that's a sign to probably get out of this trade and look for a move back down to the low end. Right now, holding a breakout, holding above your previous all-time high. It's still looking bullishly, looking like it's a little bit more bullish than most sectors. So healthcare is still looking strong at this point in time. Finally, let's look at XLY, consumer discretionary. This sector has been resilient despite the weakness in Tesla. Obviously, we all know Tesla is the worst performing stock in the S&P 500. So granted, XLY is still holding up relatively well. You did get that golden cross a number of weeks ago. If we look at the 200 and the 50, you got that beautiful golden cross on the weekly chart, which does signal higher prices to come over the medium and long term, but it doesn't mean it's immune to a pullback. I would still like to see XLY retrace at least into this 170, if not the weekly 50. I would like to see XLY retest that area. That could correlate with my downside target in Tesla. Again, my downside target in Tesla I have been calling for. There's a couple levels, but my near-term downside target is basically around this 140, 142 area, right in this vicinity. 142, 148, 145, right in this zone here is where I think Tesla is going to get a pretty substantial bounce. Now, just keep in mind, there's a lot of overshoot that can happen in names like these, especially if indices start to break down, but it is shaping up. Tesla's looking like potentially a 3 weekly bar surge into next support. before it gets its little bit of a bounce. What I think we could see is some sort of price action like this, where we get 1 week, 2 week, 3 weeks of sell side pressure right into a support trend line, right into this channel. I think that's what we're shaping up. We had a pierce of that channel and it got bought right back up. So I think that Tesla has another week of downside, and then potentially if it fulfills this downside move, we could look for a little bit of a long trade. Now there's going to be a lot of support, a massive support on Tesla, again, right at this trend line. So maybe it's even 137 that we pierce, 136. You can see that upsloping trend line all the way from your COVID to your low here in 2023. All right, on that note, to sum things up, many bullish sectors, many bearish sectors, many overbought sectors, many sectors that are just chopping in a range. So with the overbought sectors like technology, if they start to sell off and see a little bit more downside over the coming weeks, that is going to prove to be a potential buying opportunity and a lot of potential bullish entries for some technology names. Now, if technology also starts to sell off over the coming weeks, you should see some of that capital, because it's so concentrated in such a plethora of capital, since it is much the largest sector in the overall indices. It could definitely cause a huge bid in some of the other sectors. So whenever capital rotates out of technology, XLK, QQQ, there's so much capital that is still looking to go long, where it could give us a lot of other rotation trades. And I believe I am seeing glimpses of that in some individual names, which our members currently hold a couple of them, but I am looking at potentially eyeing up some new positions, because I do think capital rotation is a strong way to make money in this market. And I do think it is one that we will see, especially since this is the first real sell-off from the all-time high prices. Typically, people are still bulled up. Typically, people are still waiting to buy the dip. And I do think that capital rotation trade will serve us well in the coming weeks. So stay tuned, because there's lots of names that we could be picking up on the long side if we get that beautiful technical sell that I'm looking for in the major indices. On that note, members, stay tuned for more. Subscribers, stay tuned for more. Please give this video a like down below, and be ready for a lot of crazy action as we head into an FOMC interest rate hike decision next week. Thank you all, and we'll see you on the charts a bit later.